Yeah, thank you very much for having me here again. Thank you very much, Yves, for the nice introduction. This year I would like to speak about current trends in ship finance, and I've singled out corporate finance, green finance, and institutional money as topics to discuss in the next about 15 minutes. Yeah, I think on the 24th of January, it's not too late to welcome you to the new year. So I would like to say, ευτυχισμένο το νέο έτος. And I'm very happy to be invited to the New Year's ship owners party. As you can see here, most guests have already arrived. And I'm pretty sure that a ship owner, apart from dealing with finance, would be busy 24/7 with all the topics which are discussed here and raised here. And this you can see that this is the challenge, that the new year brings a lot of features and increasing number of unpredictable factors which have an influence this year and in the years to come on the success of a ship owner. Finance just being one item of all these things. So, well, let's hope that at least finance is plain and vanilla and simple in 2019. Yeah, but unfortunately I have to disappoint you. Shipping finance is a rather complex issue in the past and in the last few years, and it's not getting any better this year. In the past it was pretty easy. You had a very few options to get funding as a ship owner, and these options were available big style. Now the picture is different. There is a variety of options, but they are not there so much in big style. So they're rather picky, and they're in small style or medium style, to say so. And the challenge for a ship owner consists to maneuver its way through this financial jungle with all these expressions, with all these funding options, with all these buzzwords, and to find out what is appropriate for him, what is available, and where it makes sense to put a focus on. And I singled out corporate finance, green finance, and institutional money as the three, let's say, major trends which probably have an impact on discussions of most shipping companies, or you read about it in the press. So I think corporate finance is maybe the buzzword if you go to your banker, or if you listen to a speech of a banker, or you will listen to a panel discussion. There's trust that this bank is doing now corporate finance style loans. And then you might go home from the meeting with the banker, and you might ask yourself as a ship owner, so what does this exactly mean? What does corporate finance mean in shipping? And so if you then have a look at the Cambridge Dictionary, you find out that corporate finance is the process of providing companies with money to invest in their businesses. Well, I think this doesn't bring us any further. So if you have a look what a corporation is. A corporation is defined as a large company or group of companies that is controlled together as a single organization. So I think this doesn't make it any better. And this is exactly the issue, the lack of clarity in defining the term corporate finance. And this brings a lot of uncertainties and a lot of room for interpretation when you meet banks and when you meet investors, because there are different understandings among all these people who are out there in the market. So we failed with the first attempt to define corporate finance. Let's try to do a second attempt. So, well, there is a common understanding among the banks and the investors what corporate finance is. And they say corporate finance is something, somehow, somewhat more than just single asset funding via an SPV. But this is already where the similarities end, somehow, somewhat, some way. So I'm unfortunately not in a position to give you a clear definition of how corporate finance is seen by shipping banks and shipping debt investors. But I can give you a few points for consideration, a few questions you can discuss with your banks to find out how they define in-house corporate finance. And then you will see, if you talk to 2, 3, 4 of your principal banks, you will see they have a rather different understanding. A very good example of this is, for instance, if you have a regular SPV financing and the vessel has a long-term charter attached, ideally full payout. You will have banks who will tell you, well, wonderful, that's corporate finance because I can put it into my corporate rating tool. You will have other banks who will say, no way, this is no recourse. So it's a task for you as a shipping company and a ship owner to talk with your banks and get a good understanding about the lending policies and about the definitions of corporate finance, for instance, when you would like to consider of getting funding in the future of these banks, and so you have a better understanding of what you're up to. But you could have also another situation where you suddenly are in the field of classic corporate finance and you didn't want to be there. And this is the case if you decide as a shipping company to put a lot of emphasis on becoming a ship manager. So easily said, the more vessels you manage, the less vessels you own, the more likely it is that your bank might consider you as a corporate client. Sounds good, but if you're a classical corporate client for a bank, it usually has 2 challenges for you. One is that you might reach a certain critical turnover, and this can be quite high before you are considered a corporate finance client. And what corporate bankers don't like at all is volatility. So this is difficult. It's a little bit like if you are a basketball player and you are decide to go to play handball. You still play with the ball. You still play the ball with the hand. Also, the playing field is about the same size, but the rules are different. So I don't say it definitely has an impact on your possibilities to get funding, but you need to find out if you consider shifting to ship management, what this could mean for you in relation to your principal banks when you ask for funding in the future. Green finance as the second trend. As we've seen on the first slide, I think a ship owner these days has much more pressing issues on his hands than dealing with green finance. But it would be a wrong advice if you shrug off the meaning of green finance and say, leave me alone with that. You should have this issue on your agenda. Because who gives you the guarantee that the current discussion around producing coal is not shifting to transporting coal in the public eye? Or who gives you the guarantee that the current discussion about manufacturing sustainable products is not shifting to transporting these sustainable products? This is a decision you cannot influence, and this is a decision which will be taken by the public. And the pressure comes also from another angle. In December 2017, the Network for Greening the Financial System has been founded. It's a name which usually causes a smile with many people if they hear the name, sounds kind of cute, but especially with bankers, this becomes a rather wry smile if they see who is behind this. Because this network has been set up by central banks and by financial supervisors. And the reason for this is that they consider climate change as a threat to the financial system. So it's very likely that they will come up with some, let's call it nicely, recommendations on the influence of banks in the future. And usually these recommendations are not some unbinding, friendly recommendations you have to follow. Usually those are guidelines, and the guidelines are very likely not rewarding you for doing green finance or sustainable finance in general. They will punish you as a bank if you provide financing for non-sustainable projects in the view of the regulator. Punishing banks means usually higher capital requirements. And there's another group of people who look very carefully already now at sustainable finance and sustainability, and those are the institutional investors. There is the question to getting in, and if you're in, to stay in. So you are very easily kicked out if you are not in compliance with the sustainable regulations of a debt fund, for instance. Which brings me to the topic of institutional funding. I think we all here in the room, we know one thing for common, that institutional investors are wringing their hands in desperation to find projects to deploy their capital. But if you talk to these people, you will find out that they have a very clear picture and a very good understanding what exactly they are looking so desperately for. And shipping is not the poster boy for institutional money, but there are funds, especially debt funds outside, which are managing the money of pension funds and insurance companies who look at shipping. Not necessarily direct investments in shipping loans, but they are available for investments along the whole supply chain of a shipping company. But you have two challenges to master when talking to these funds. One is the increasing negative perception of the shipping industry due to the shipping crisis and all the discussions about environmental issues. And the other is simply that you do not speak the same language with these guys. And I do not mean that one is speaking English and the other is speaking French. So you use the same language, but you use totally different terms, and you don't find to each other. But the good thing is there are ways to overcome this. And the best way is that you use your principal banks or your trusted advisors to form a plan with them how to approach institutional money. It is a possibility which involves the network and the know-how of the advisors and the banks, and it is definitely a long shot, and it's definitely not a no-brainer. But institutional money is there, and it's possible to get it. So what banks are doing these days, and what they do in the future. I think you all have a very good understanding what banks were doing in the past, and you have probably a good understanding about what banks are doing these days. So let's have a look at the crystal ball, what banks will be doing in the future in terms of ship finance. I'm convinced that you will see regionally active banks gain in significance when it comes to providing funding for the shipping industry. And this you will see in two ways. One way is that you have regionally active banks who had no exposure to the shipping industry or who had a small exposure in the shipping industry. They will enlarge their presence, but they will do it very carefully, step by step, so they will become small players or they will become medium players. The second way is that you will see globally active banks refocusing geographically. So it's a trend you already see in corporate finance, that there are fewer banks in the world who are really willing and able to provide financing on a global basis. And this is a trend which will come to shipping. You will see one or other shipping lender refocusing to his home country or to the home country and the neighboring country or to his wider area. The second important point is, which has an influence on the future availability of banking finance, is Basel III and Basel IV, which was the topic of my presentation last year. And yeah, Basel III and Basel IV is still here. So it's very unlikely that you will see longer loan tenors. So the 4, 5, 6 year you see at the moment, I think that it will be for the time being. Additionally, Basel IV and Basel III put some pressure on asset-based financing. So there is an increasing tendency of banks to avoid on-balance sheet lending. So banks will actively go also to find solutions with other partners, and they will use their know-how and their network with other players in the market to find solutions and to coordinate solutions in the future. So, yeah, 0:00 I see on the clock, so it's time for my conclusions. If you go home to your office, or if you go home, or if you go to your office tomorrow, I would like that you take 5 points with you. One is corporate finance. Speak with your principal banks and find out how they interpret corporate finance and how the risk assessment is done in terms of corporate finance. Second is ship management. If you consider shifting stronger to ship management, find out what this could mean, if this has an implication, and if yes, what implication it has when talking about funding requirements in the future. Third is green finance. You should prepare that the term green finance might disappear, but the underlying understanding beneath green finance will be there and will be part and will be a standard in your discussions with banks and investors in the foreseeable future. Institutional money is there, but you as a shipping company need to walk the extra mile. It's not vice versa. Don't believe in the tale of the institutional investor desperately looking for any opportunity to invest money. And last but not least, use the competencies of your key banks in terms of network, in terms of know-how to provide current refinancing of your outstanding debt or to secure future funding requirements. Ευχαριστώ.